So in this video, we're going to talk about how to make entries in the market. Based on the previous videos that we were making before, in today's video, we're going to talk about how to make entries and different styles. So let's begin with the video before we waste any more of our time. So the first thing that we need to understand is that we have different criteria to make entries in the market. There are a lot of ways to make entries. The first one that we're going to cover is taking trades on the current time frame. This is suitable for scalping, maybe let's say in the 50 minutes or 5 minutes time frame, but it doesn't include any higher time frame. You just trade only one time frame, but this is kind of risky because you don't have the overall trend or bias from the higher time frame. So in my books, I don't usually recommend it. So moving on, we will cover how to use higher time frame for analysis than using the lower time frame for entries. You can choose which time frame is suitable for you, because you can use the 4 hours time frame and then use the 15 minutes for entries. It all depends, because sometimes you might have an analysis on the 3 hours, but when you move on to the 15 minutes there is no entry, but when you move on to the 5 minutes there will be an entry for that trade analysis. It all depends how the market behaves in that certain day or time. And then this is the confirmation entries. This is how you choose how you want to enter the market, using the confirmation or the limit order. You decide, but I like to use this one. Sometimes I use limit order if I have a confirmation from price action. So using confirmation entries would include using candlesticks to confirm if the market is really trying to move in that direction of the market. Limit order, basically you place a limit order in the market for a certain time, because limit order can still expire during an analysis. That's what most people don't even understand. And you can decide which session you want to trade, maybe the New York, the London, or the Tokyo, or even the Sydney. It all depends on your trading style. But because we're building a strategy, we are going to cover like everything so that we can see how we can improve the strategy when we move forward. So don't forget that we are going to make a longer video talking about that. Here, this is how you can trade the current time frame. Based on this analysis, because we are going this blindly, let's say this is the 15 minutes time frame. Don't worry, this works on all market, the crypto, the Forex, even the indices. Everything that you are going to learn from this video works on all markets. So let's say right now you see that the market broke this, closed this fair value gap, and then you see this price action. As previously, you already know what kind of price action is this one. If you don't know what kind of price action is this one, you can go back and check the previous videos. You'll understand what I mean from this. So based on this, we can see that the market pushed to the downside and then suddenly pushed to the upside. This is a rejection to the upside. Even if we have this, you can clearly see that these candlesticks, they have the same color, but let's say the same color, they are all bearish in this situation. But look closely at all of them. You can clearly see that here price is trying to push to the downside. Here price is trying to push to the upside. That is why you see this move going down. The same applies as this one. You can clearly see the price move to the upside. You will see this kind of price action a lot in the market. Clearly, you can even see this one. This one is a bullish candlestick. Most of the people will think that the market is pushing to the upside, but then you see a huge drop. That's how at least you can try to understand this. So from here, if we look closely, you can still enter the market right there on this close of this candlestick, stop loss around this area, and then maybe take profit here, or even to close this fair value gap around this area. So let's look how the market behaves. You can clearly see that price moved to the upside, and we have some continuations in the market. This one is a continuation candlestick, even this one. And this candlestick here looks the same as this one. But here, price took some time to go to the downside. That's one thing you should at least try to understand. And here, if you look closely, the one thing that you need to focus on is price action most of the time. If you look at this area, you can see that this is a bearish candlestick, but the wick from here is rejecting. That is why you see another move to the upside. If you focus on price action, everything will be very easy to understand. Let's move on. And another thing that I want to point out, if you want the settings from this indicator, I have provided them on the previous video. We can clearly see that we broke this area with an impulse, then we corrected here, but there is still a huge fair value gap here, FVG, and then we have another one here, FVG. But on the current price action here, this is when we will be doing top down analysis. We are on the 4 hours time frame. But then looking at the current price action, we can clearly see that we have a move like this, and then we have a bearish candlestick here. That means we can clearly look to sell on the correction here to fill in this FVG, and then our invalidation will be at this high invalidation. So that means we can look to enter for a sell around this area using the lower time frame price action for the market to break this low to close this fair value gap around this area. That's the only thing you can try to understand. So if we move on to the lower time frame, we will put a line here and then a line around this area for our take profit. This will be used as our entry area. Let's move on to the lower time frame and see how price action will behave. This is the lower time frame. Right now we are on the 15 minutes. So on the current price action, you can clearly see that we still have a fair value gap here. FVG. This is our higher time frame take profit level, and then that means that right now we'll be looking for the market to move to the upside, touch this area, and then wait for some kind of price action like this, something like this one here. As long if we have huge wicks that are rejecting from the upside, this will confirm our entries. So let's look how the market behaved after it has touched this area. Look at this candlestick that touched the area and this one. They all have a smaller wick at the bottom. They all have smaller wick at the bottom. Yeah, the upper wicks are very huge. It goes to show that we closed this fair value gap here, and then we are looking for the market to move to the downside. We can still enter at the close, put a stop loss above the fair value candlesticks high, and then drop lower. Let's put it and see. Our entry will look something like this. So that means that right now, the only thing that we need is to be patient for the trade to play out, or maybe hit our stop loss. The only thing that you have to do is manage the trade properly by using risk management. So let's look how the market behaved. You can clearly see that the market moved to the downside, and we have some retest here. You can clearly see that we have some retest. The market will always tell you when the market is trying to reverse. Even here, you can clearly see that this is a sign of a reversal to the upside. The market will never move in a straight line like this. Even if it's a straight line like this, we will have something like this. It all depends on which time frame you are looking at. Because today we are not going to talk about the settings of the indicator. We are focusing mainly on the entries. But if you want the indicator, you'll find the link in the description below. The discount code will be there. So let's move on to another example here. Here, this is when we use confirmation entries or limit order. From here, this is a rejection candlestick. We have to see a rejection. This is a rejection followed by engulfing candlestick. Also on the engulfing candlestick, focus on checking the wicks. If the wick is stronger to the upside and price makes an engulfing candlestick like this, that means we'll be looking to go long here. This one is an engulfing candlestick around this area. So this one here, let me show you on the next example. Here we can clearly see that price touched the area from the indicator here. But the only problem is that if we see a correction here, let's say we see a correction, price drops and breaks it here, this is where we should be looking to go long. But you can see the price action that is being created here is kind of messy. So to understand this, you can still move on to the lower time frame, and you can clearly see that we broke this low. So to make this very easy, because we have a confirmation of a bullish candlestick, we can use a buy limit order here or here on the open or even on the low of the previous candlestick. So that means you'll be looking to go long on price retest here by using a limit order. Then our setup will look something like this. We put a limit order here or here. Then we wait for the market to do whatever it's trying to do. That's the only way you can try to understand how to make entries. It all depends. So another thing is that if we look closely around this area, you can clearly see that we have a rejection and price even came up, traded above this area. Your stop loss should never be this tight. You still have this high here and even this high here. Price action will always tell you a different story. And as I said, look at this bullish engulfing candlestick here. It's not even that clear. Followed by this rejection. And then we have this strong move again, breaking this. If we read this closely, we can see that we have a move to the downside and then it started to be slow. And as I said before, if you see that the market is correcting like this, breaks this low, gives you a price action, you should be looking to go long here. That is why right now, after this correction here, you can see that we broke the low. Price gave us a rejection in this area. That is why you see the market pushing to the upside. That's how at least you can try to understand. Even in this situation, we can see that here the market is very choppy, unlike this area. Then we push to the upside, almost breaking this high. But if we look closely, we corrected inside, make a price action, then we drop to the downside. And we have more confirmations. We even have another confirmation here. This is a confirmation to the downside. And there is no need to confuse a lot of things. This candlestick 1 and 2 and 3, they are all confirming because we are targeting this fair value gap. That is why you see the market pushing to the downside. That's how at least you can try to understand this. So here, let's look at another example. Here on the indicator, you can clearly see that we broke above, but let's focus on price action first because we are going to use a limit order here. You can see that we are moving to the upside. This is an impulsive candlestick, and then here we started to be slow. But the important thing is that look at this area. We still have a fair value gap. Sometimes price doesn't even come to this older fair value gaps here, but you have to consider them for future references. So to use a limit order here, you'll be waiting for the market to touch this fair value gap by using a limit order here, limit order, and then stop loss below. And then you wait for the market to push to the upside. Because you can clearly see that here we corrected after this move, and now we have this move. Where is this? So that means if you don't have time, you can put your stop loss here and wait for the market to push the upside. Your trade will look something like this. This is very clean. You can use a limit order. That means you'll wait for the market to come and retest this area and move to the upside. If you don't have confidence by entering the market here, you can go to the lower time frame. If you are on the 50 minutes, you can still go to the 1 minute and then your trade will look something like this. That's the only way you can try to understand this. So I guess this is the end of our video, but let me show you how to get the indicator that I was using here. To get the indicator that I was using, visit Flux chart. This is an invite only indicator. You will find all the link in the description below. They are running a special. You can use my promo code to get the indicator. Then the indicator will be added to your TradingView account. This will be also supporting the channel for future videos like this one where I educate you a lot. So follow for more on this strategy because on the next video we're going to do an intensive backtest. See you on the next one.